A very good morning. Welcome to Power Breakfast. We are in the Mumbai News Center. I'm Nigel D'Souza. With me, Anisha Jaid. Hey, Anisha, good morning.
Good morning.
It's a Friday. I mean, once we're done with this and we go into a weekend, it's been quite an eventful quarter two set of numbers. We have a whole host of events, though, to look forward to in terms of the Tata Sons board meet. Good to see S&P 500. They have been on a 5-session losing streak. At least that broke off. So global cues more or less positive.
Oh, well, yes, you can talk about the ongoing tussle as far as Brexit is concerned and the fact that the crude is inching high. But today is Friday. Let's keep the cues to a positive start and kick off.
A quick check on the Asian markets that are trading more or less mixed. They've retreated from the highs of the day amid street close, as well as fresh uncertainties coming in surrounding Brexit. Now, the Nikkei was holding higher. That's come off the top of the day, holding mildly in the red as we speak. Let's pull up the dollar yen as well. Remember, in yesterday's trading session, it was hovering around that 113.6, 113.7 odd. So some strength being seen on the yen as well. Not great news. And that explains why that market's a relative underperformer, because all the other markets, the last time I checked, they were still holding in the green. Be it the Kospi, be it the Straits, as well as the Taiwanese index, they were managing to eke out some gains. Now the Kospi is as flat as can be, but more green than red just to kickstart trade. And that's perfectly replicated in the SGX Nifty, because that's suggesting maybe we'll see a 30-point bump up just to kickstart trade.
Okay, so that was about Asia. Let's see how the US markets ended, because remember, the Wall Street snapped multi-day losing streak as the S&P and the Nasdaq end higher over 1%, and Dow also gained around 200 points. Now, rebound in stocks such as Apple and JP Morgan Chase was what aided the index, as well as the sentiment also improved on reports of possible talks between US and China on trade negotiations. CNBC of all that transpired on Wall Street yesterday.
U.S. stocks finishing higher today, the Dow adding 208 points, the S&P up 28, and the Nasdaq tacking on 122. U.S. retail sales rebounding sharply in October, boosted by motor vehicle and building material purchases alongside household electronics and appliances. The Commerce Department saying retail sales up 0.8% in October, higher than economist estimates. The rebound likely driven by rebuilding efforts in areas hit by Hurricane Florence. Vermont Senator Bernie Sanders introducing a bill today that will prevent companies like Walmart from buying back stock unless they pay their employees at least $15 an hour. This coming after companies like Amazon and Disney have hiked up their company's minimum wage under increased pressure from politicians and social activists. And KB Homes falling 18% today, on pace for their worst day since August of 1992. The LA-based home building company issued lower guidance for its Q4 results, with Credit Suisse, Wells Fargo, Barclays, and Wedbush all slashing their price targets for the stock. Fewer spec sales and deliveries and delayed closings due to California wildfires, a major reason for that lower guidance. And that's the action from the U.S. market. Back to you in Mumbai.
Well, on that note, let's hear what Bob Dole of Nuvin had to say about the Federal Reserve Chairman Jerome Powell's concerns around the global growth and also the economy, the Brexit situation, as well as the recent market correction. Let's listen in.
The economy globally has been slowing. This is really not new news. In the U.S., it's 3 this year. It's probably 2.5 next year. There's still good numbers relative to trend growth, but that's decelerating the earnings growth, and that's a lot of people worried. He's still in the process of normalizing, creeping higher. He mentioned it. We hear it the same way. CEOs complain about higher wages, can't find workers, transportation costs, raw material. It's not serious, but it's moving in a direction that's going to keep him going. This has been noise for quite some time, disruptive. They don't know what the answer is, problems internally, rumors they may have to vote again. None of that's good because it just creates uncertainty. Right. But I think the bigger deal is China. Look, these guys, both presidents need something, and they'll agree on something. It might just be the sky is blue, we agree. But they'll find something to agree on for consumption purposes. Technically, a lot of us were not happy with the bottom, 2603 on the S&P. There was not enough vigorous selling, so we didn't like the rally. It didn't show a lot of strength either. So we're going back and testing. I hope we find a bottom. The economy is decelerating, but still to a good number. The problem is the upside is much harder to see because of these problems. I don't see big downside, but unlike the January correction where we bounced, it took 7 months to make a new high, if you recall. I think it's
On that note, let's also hear out opinion coming in from JP Morgan Private Bank's Anastasia Morso on the way going forward for the US economy.
I think what the Fed is probably starting to pay attention to is now that they've raised rates, we're starting to see a slowdown in the interest rate sensitive parts of the economy. I mean, look at housing, look at autos, even look at the semiconductor trade. I mean, all of that is starting to react to higher rates. The other thing that's happened in the market is the correlation is starting to shift. So for a while their rates were going up and stocks were going up. But now, if you notice, the stocks are actually reacting positively to a slowdown and a pause in rates. So I think that's going to be really key for the Fed.
Well, European markets more or less were lower in yesterday. The CAC and the DAX had ended in the red. It wasn't just the frontline indices. The Irish, the Portuguese, as well as the ATHEX, all of them ended in the red in yesterday's trading session. The key reason was uncertainties over the Brexit negotiation deal. Now, British Prime Minister Theresa May has toughened her stance on the Brexit deal. This even as many of her cabinet ministers have resigned, opposing the proposal. In fact, a UK Brexit minister, Dominic Raab, too resigned. William Marks filed this report from outside the British Parliament on what had been a day of dramatic developments in London.
Essentially, we've seen 2 cabinet-level resignations so far this morning, 3 other government resignations after Theresa May's cabinet approved her draft proposal for Britain's departure from the European Union. What this means, increasing pressure on the Prime Minister from within her own party, because those people that have resigned can, once that proposal faces a parliamentary vote in the House of Commons behind me, they can vote against the government. So if she ends up facing very difficult parliamentary arithmetic, it would mean that this proposal that she spent 18 months negotiating with the European Union would potentially be dead in the water. In the near term, there's also a lot of pressure from within her own Conservative Party about her leadership. If 48 of the 315 Conservative MPs decide they're not happy with her as leader, they could trigger a no-confidence vote, and that could have disastrous consequences for her future, and there's a lot of uncertainty then about what comes next. In terms of her comments just now, she's been speaking to the House of Commons just a few moments ago. Take a listen to what she said about this deal.
Mr. Speaker, what we agreed yesterday was not the final deal. It is a draft treaty. It's not. It is a draft treaty that means that we will leave the EU in a smooth and orderly way on the 20th of 2019, and which sets the framework for a future relationship that delivers in our national interest.
And as you guys can hear there from that laughter that greeted her comment, she faces a huge amount of skepticism within her own party and from the major opposition parties about this process. What's going to happen next? Next Sunday, the European leaders, the EU 27 as they're called, will meet in Brussels, an emergency summit. They will then potentially sign off on this deal, at which point it comes back to the various European parliaments, including the one behind me, for that crucial vote. And at that point, we'll get a better sense of whether this will indeed go through in what she calls an orderly fashion.
Let's shift focus to the world of currency now, because the dollar index weakens from previous session highs. Meanwhile, the yen trades around the 113 mark. The index had gone below the 97 mark, but now again back above, just above that 97 mark.
And turning our attention to the all-important world of commodities, then today, in fact, we have Brent crude prices hovering around the $66 per barrel, while at NYMEX as well has gained a tad bit. That, in fact, is up close to around $56.50 per barrel.
On that note, let's slip into a quick break. Up next, we'll get you all the cues and news you need to know for trade this Friday morning. Straight to the Dalal Street action then. Financials led the market high yesterday. Nifty was able to regain the 10,600 mark. The Sensex and the Nifty closed the day with a gain of 1/3%. The broader markets too outperformed, with the mid-caps ending 0.5% in the positive, but it was clearly the financials and the banking space that led the rally. But let's go across to Sonia now, who will tell us how the cues are stacked up for the day. Sonia, good morning. We managed to eke out some gains yesterday, and today as well, more or less, it looks positive.
Oh yes, it does. It seems like the bulls are back in control. In fact, in the last 2 weeks, the Nifty has gained 3.5% and largely led by financials, as you rightly pointed out. Big delivery-based buying as well in a lot of key banking names. This morning too, you have some positive global cues coming in. The US markets ended higher with gains of 1%. The S&P 500, in fact, snapped its 5-day losing streak. There was a bit of an up move in Brent, but largely it remains at those subdued levels of $66 a barrel, which is a positive. You've had big buying from from FIs as well. Of course, there was that Kotak block deal because of which the FI number looks very large. But even in the F&O market, there was quite a bit of buying. Also, if you look at, November so far, the MSCI India index has outperformed the entire emerging market basket. So MSCI India is now up 5% in November versus Asia ex Japan up about 2.3% and the emerging market index up about 1.7%. So it's clear outperformance and looks like that trend could continue. However, the number to watch is the 10,756 level, which is the 200-day moving for resistance at that level itself.
All right, Sonia, thanks so much for putting all the cues up for us. But what about stocks we're looking at?
Well, as I said, financials, Nigel, were the big movers yesterday. There was big delivery-based buying as well. ICICI Bank saw 300 crores of delivery buying yesterday. In fact, from the lows in October, ICICI Bank is now up 22% and the best performing banking stock. Axis Bank also saw 250 crores of delivery buying yesterday, so keep that on your radar as well. You have Jet Airways that will be in focus. The Tata Sons board will meet today. There's no decision expected today, but they could deliberate over buying the assets of Jet Airways. So, that stock has already gained 20% this month. Maybe some more up moves there. You have SRF that's in focus. They have a capex plan to set up a facility for an agrochemical unit. They've upped that capex to 257 crores. So that's an additional positive for them. And Infosys as well has announced Jay Sangraka as an interim CFO. So Infosys could be in focus. But largely keep an eye out on the banks. Big delivery buying over there.
Well, the Jet Airways stock has been in focus. If you look at it in yesterday's trading session, the stock saw massive volumes, moved to the high point of the day, ended virtually at the high point of the day. And if you're looking at it in the last 45 days, well, the stock has nearly doubled. That's because the street is awaiting one of the biggest aviation deals in India. Now, Tata Sons is eyeing debt-ridden Jet Airways, and the conglomerate's board could discuss the deal as soon as today. Utkarsh Chaturvedi joins in. Utkarsh, let's keep it simple. Where do things stand and what can we expect at the Tata Sons board meet?
What we are picking up from our sources is that Tata Sons is more interested in buying stake in the company rather than just assets. What our sources tell us is that most of the valuable assets in the company are non-transferable. For example, the Pika routes in the cities like Delhi, Bombay do hold a lot of value, but it cannot be sold. Same goes for parking spaces and international codeshare agreements. Remember, what Jet Airways brings on the table are international hubs like Abu Dhabi and Amsterdam, which can be very crucial for the international journey of Vistara. Also, Jet's tangible assets and which are actually saleable do not hold much value. What Jet Airways currently has are some 777s, C-30s and 737 aircrafts which are almost 8 to 10 years old, and anyways Jet is facing troubles to lease them out. Also, what's on offer is the Jet Privilege program. It's an important database and regular customers of the airline which hold a lot of value and is important for any management running Jet Airways. Of course, with that comes the huge pile of debt and outstanding payment to various parties. But Tata Sons is yet to decide on that. Hopefully, more clarity will emerge after the board meeting ends today.
Oh, well, yes, Utkarsh, all eyes will be on that all-important board meet. In fact, we had the discussion with a whole host of experts on the matter. Kapil Kaul of Kappa, for example, says that the selling to Tatas will be good for Jet Airways and the sector. Take a look.
We believe that consolidation is in fact inevitable, and I think if it happens in this form, it will be good for Jet. We treat it positive for Jet. And I think it will be positive for Tatas as well. The deal has to be structured, it has to be made win-win for both. Those are the steps that the two promoters, two companies will take. But I think it's a very positive, it will be directionally positive for the sector. When you look at Jet Tatas, I can't think that without a change of ownership, an acquisition is possible. And I don't really see a 3 to 5 year tenure that they would want Mr. Goyal to stay for 3 to 5 years. I doubt whether that would be the case. If the acquisition takes place, it has to be a complete takeover. My sense would be that the value proposition that Jet would bring to Vistara and the dynamic of the integration would be substantial. It will move them from one extreme to the other extreme and bring a tremendous relevance to Tata's airline operations. So I think, without getting into specifics of the deal, I believe that the acquisition would be extremely positive for both the companies. And the size and scale it gives is going to be something that will almost be a step change. So I think from the perspective of Jet and as well as Tata's, I think there is a strategic rationale to make this work.
Well, let's get straight to the next top story. Yes Bank, that was lower in trade yesterday following the resignation of the bank's non-executive chairman, Mr. Ashok Chawla. Now, the CBI charge sheeted in the Aircel Maxis case had named him, and this is one of the potential reasons for his exit. Now, sources also tell cnbc TV18 that differences with promoter Rana Kapoor could also be another reason behind his exit. Ritu Singh is here with more details. Ritu?
Well, we understand that more than one reason could have played into Yes Bank's chairman Ashok Chawla submitting his resignation, and sources with knowledge of the matter have told us that differences with Rana Kapoor may also have played a role in Ashok Chawla's exit from the bank. And we understand that Rana Kapoor felt that Chawla, as the chairman of the board, did not make more of an effort to support him, especially when RBI cut short Rana Kapoor's tenure, and this may have led to souring of relations between the two. Remember, we had reported earlier that charges of alleged corruption in the Aircel Maxis case also led to Yes Bank reviewing if Chawla still met the fit and proper criteria, and parallelly, the bank's Nomination and Remuneration Committee, or NRC, is also understood to have sought legal counsel on this matter. And just last week, we also understand that the bank wrote to Reserve Bank of India apprising it of these allegations against Ashok Chawla and sought the regulator's advice in this matter. Now, we understand that RBI has not responded to that letter from Yes Bank yet, but matters came to a head in the last NRC meeting where Chawla said that he had no further declarations to make, and that, coupled with some of the differences with Rana Kapoor, may have ultimately led to Ashok Chawla choosing to resign from Yes Bank.
Well, let's take a look at the Asian markets, because there's some amount of weakness actually coming in, because if you look at the Nikkei, we are sitting at the low point of the day, down about 75 points now. When we started off the show, that one was sitting in the green, but now at the low point of the day, down about 75 points. Even if you look at the early rates that are coming from Hang Seng, etc., so it shows that the Hang Seng is down over 200 points. Shanghai is, yes, up, holding up in the green, because there have been some positive developments regarding the trade talks. Remember, there have been reports in the US suggesting that a lot of these ministers are doubling down their efforts to reach a trade agreement with China. So that market is holding up in the green, but Hang Seng not showing a good sign at all, down about 0.8%. Let's pull up the other Asian markets as well in terms of Straits, Kospi, etc. Let's see what they are doing, because the early morning cues were a bit mixed. Yes, so Kospi is also down about in red. Straits is holding up in the green, but pretty much mixed cues coming in from Asia. SGX Nifty was suggesting an uptick of around 30 points, so that is still sitting with a gain of around 40 points. That's a good news for us, that maybe we'll start with a green tick, but important to see how second half of trade pans out, because there has been a lot of volatility that has been creeping in to the Indian markets as well. But moving on to corporate action now, in an exclusive conversation with our colleague Nisha Poddar, Ramesh Swaminathan, CFO and ED of Lupin, says that the price pressure in the US market is easing. He talks about going ahead as well. Here's a snippet of that exclusive conversation.
The first two quarters have been pretty lackluster when it comes to America. We do believe the third quarter would be much better than the second quarter for a few good reasons. The first being, the kind of price erosion that we saw in the past, I think it's behind us. There's a lot more price stability. In fact, in certain molecules, we are actually looking at some price increases. The second part is that the top three companies in the US, which included Mylan, Teva, and Sandoz, they've been shedding part of their portfolio. Right. So a lot of the other companies from India have also been beneficiaries, including us. And third is, it is going to be the flu season, and to that extent, we would have, better sales from some of our cephalosporin products. And of course, there has been a pickup of demand for certain other products also. Right. So for all those reasons, we believe the third quarter would be certainly much better than the second quarter.
Right. While you say that price pressure has been easing, but you have particularly mentioned the US market, how about the India business for Lupin?
India is business as usual as far as I'm concerned. There are dark clouds on our ever-expanding list of essential medicine, the threat of generics at some point of time and all of that. But right now it's business as usual, but it's tough all the same, because a lot of these fixed dosage combinations have been banned and all of that. Not that we are impacted hugely by it, but as far as we are concerned, we are pretty okay.
All right. But your outlook for the India business in the short term?
It's pretty good, yeah.
All right. And when it comes to Pithampur facility of yours, you got a warning letter there. What is the status and what are the remedial measures being taken?
Both Pithampur and Goa get a warning letter, and this is about a year and a half old now. We've been working on it for the last several months, so to speak. We have been working with, in fact, top consultants, Lackman consultants and the like, to actually get this remedied. Since then, we've been giving periodic updates to the FDA. We've already invited them to come and look at the facilities. Enough time, and we do believe that by the end of this fiscal, it should be sorted out.
Right. When it comes to growth for Lupin, how much of weightage as a CFO do you put on acquisitions?
If you look at our history for the last about 10 years, about 85% of our growth has actually come from from organic measures, so to speak. Now we have done at least about 13, 14 acquisitions in the last 10 years, so to speak. But I would say that a lot of them. It's first year it's actually an acquisition, and after that, it is that. So if you look at Japan, for example, we bought it when it was about $70 million. Today it's doing about $300 million. Look at companies like in Philippines, Australia, in Germany, and so on. All these were potentially between $3 and $5 million when we bought it. They're all touching the $40, $50 million mark. It's been organic growth throughout. So I think I would say, organic growth is indeed the most important part of our weaponry.
Well, on to another big story then. RBI's board member, Mr. Gurumurthy, has fired a warning shot ahead of the crucial board meeting of the central bank on the 19th of this month. Now, in his international foundation, Gurumurthy criticized the RBI's policies for curtailing the ability of banks to lend and called for changes to prompt corrective action framework. Gurumurthy, in fact, hailed demonetization and said the economy would have collapsed without the move. Let's take a look.
Japanese began printing $40 billion every month from October 2015. Today they have increased the size of the printing to $70 billion per month. There is liquidity problem. Can the government of India say, I will give you 100,000 crores worth of government securities. You give me the cash. The government of India cannot do it because it has passed a law giving up that power. These are all issues which need to be discussed. But our economic theoreticians will say, no. Printing of currencies is wrong. We have been following an utterly wrong import policy of having capital goods import exceeding oil imports. We need to go in for heavy import restriction. We have got to cut down the current account deficit and trade deficit in the next 1 year. Otherwise, we will continue to accentuate this problem, on which all the institutions will have to work together. And if an import restriction is made, the media will say India is moving away from free trade, as if everybody is following free trade. In a bank-driven economy, if you restrict the banks, you are restricting the economy. You are restricting the flow of funds into the economy. We are doing more than what the Basel wants, and so the banks have less money to lend. These are all things on which there is no discourse in India. On the scale of Japan, there are only 4 internationally active banks in India. All others are domestic banks. In just 18 months prior to demonetization, 500 rupee, 1000 rupee notes rise was 4.8 lakh crores. That is what funded this gold and real estate prices. And if it had gone on the same way, 2008, what happened in America by the subprime lending would have taken place because of high denomination currency in India. If anybody wants to have a debate with me, I will be able to prove that but for demonetization, the Indian economy would have collapsed.
Okay, Lata Venkatesh joins us now on the subject. Lata, Gurumurthy has raised a bunch of issues, and these are crucial statements coming in just 3 days before the RBI board meeting, and of course, he sits on the board.
Yeah, actually, we have to divide it into 2 separate issues or 2 separate sets of thoughts. One is challenging the entire model that has been adopted of market economy. That required us to control our fiscal deficit. Also, we have opened our doors to foreign investors. So when you say, government can no longer create liquidity, basically is opposing the FRBM Act. That's what he says. The government has taken away the power to issue unlimited fiscal deficit. The point is, can we go back to that situation? Even if the fiscal deficit increases by, 10 or 20 basis points, we immediately see bond yields going to 8%, 8.25%, 8.5%. We saw that rise recently. So the point is, can we go back to the pre-1991 period? We have got into this FRBM. I don't know how we can get back. Likewise, raise import tariffs to control current account deficit. How will the economy run if we, ban imports or make imports so difficult for India? For instance, I mean, how will the steel industry work? How will automobile industry work? I don't know whether this argument is even possible at this juncture. It is like, someone is in an operation theatre and you say, like, as of now, we stop all allopathy and it shall only be, homeopathy or something like that, or Ayurvedic medicine. You're already in a stage, you've already started the treatment. Can you, at an advanced stage of chemotherapy or advanced stage of operation, go back to a different system of medicine altogether? I don't know how that is feasible. The second set of arguments is more incremental, where he's speaking about, changes to the prompt corrective action or changes to the rules in such a way that SMEs get more credit. Now, there you can have a discussion maybe, but the Reserve Bank's stand has been that the banks which are in prompt corrective action are already so weak that we have advised that they only give credit to better companies till they bring down their damaged portion of the loan. And as we have seen, even the second quarter numbers are quite horrendous. IDBI Bank, 30% net NPA, or for that, gross NPA, and Allahabad Bank, all of them, huge double-digit gross NPAs and even high net NPAs. So, the Reserve Bank saying don't give loans to below A category seems like good medicine, but I'm sure that's going to raise a lot of heat in the RBI board meeting, going by what Mr. Gurumurthy is saying. The final one is on SME credit. This is something which, of course, all governments all over the world ask, but one doesn't know exactly what the nature of the demand will be. Will he say that you lower the risk weight for SME loans? You actually give a 100% risk weight for SME loans because they don't have enough collateral, their balance sheets, cash flows, etc. don't have a history. So banks tend to ask for high capital or keep high capital. Can that be reduced by the Reserve Bank? I don't think Reserve Bank will give in because they would think they're endangering the capital system, the banking system, or recognize their NPA only after they default over 180 days. Something like that can be the demand from the board. We don't know what will be the nature of the demand exactly, but it will definitely arouse a lot of opposition from the Reserve Bank. At the moment, I'm not able to see the meeting ground, but I'm sure they may find one.
Oh, well, yes, Lata, let's hope they find a meeting ground, at least in the November 19th RBI meet that is coming up. But Lata, stay with us. Separately, we had also some macro data coming in yesterday evening. The trade deficit for October has widened, crossing the $17 billion mark. And it looks like a sharp surge in coal oil imports is the main culprit. Lata, tell us, what is your reading?
It is a difficult number. Anything above 17 billion, actually anything above 16 billion is something that we should terribly worry about. And if we continue at this rate, we are definitely going to a 3% current account deficit, which is somewhat unsustainable. It will be a pressure on the rupee. But chances are that we may not have such a high trade deficit when the November numbers come, because the biggest contributor are oil imports. The deficit, the import number for oil has risen, as you can see, from $10 billion to $14 billion from September to October. Chances are it will come down to about 12 billion in the month of November. So automatically that brings down the the trade deficit from probably 17 billion to 16 billion or 15.5 billion. The rupee may not react negatively to this number because it is a backward-looking number. The forward-looking number may be much less because crude is at 65. So hopefully this trade data is not going to ruffle feathers in the market.
Well, as promised, let's tell you the cues that are stacked up for the day from the derivative space. And Mangalam, as always, joins us now. Mangalam, good morning. How are the cues looking ahead of the weekend?
Looking fairly good. I mean, I don't know whether you're talking about the market cues or the cues for the weekend.
Talking about with, Mangalam is quite
I was talking about Mangalam's cues for the weekend.
My cues...
You're going long.
You're
going long.
I am sleeping. That's all I'm doing. That's all I'll say.
That, yeah, you've given me a lot of fodder. I can go on with that one. But let's leave Mangalam's weekend plans as well as him sleeping over the weekend. Mangalam, tell us, what about the F&O queues?
All right, I will talk about the F&O queues this time. The FIIs, they bought about 2,000 crores in the cash markets, but, we'll have to take that number with a pinch of salt because a lot of that could also be attributed to the big Kotak deal that took place in yesterday's trading session. So let's take a look at the future space then. There was a purchase of about 420 crores out there. The FIIs added 10,000 long contracts. This compares with about 5,200 short contracts that they've added. So in a sense, while the markets were moving higher, the FIIs added 2 long contracts per short contract. However, the point to note is that the Nifty futures premium came off, so that is something we will keep an eye out on. FIIs, at the start of this series, they were 29% long, and now the longs have gradually increased to 39%. For today's trading session, it is important that, these longs do get some sort of follow-through for a couple of reasons. One, crude is back above that $66 per barrel mark, closer to the $67 per barrel mark. Secondly, we have been facing headwinds upwards of 10,650 thereabouts, so that is important. Thirdly, we have the put-call ratio. Now, it's back above that 1.61 mark. The last couple of times in this series itself, we saw a bit of a decline every time the Nifty put-call ratio has come to 1.61. However, we are seeing some support at the lower levels. 10,400 put saw a fair amount of writing at a premium of around 50 odd rupees. 10,600 put, that one has a premium of around 100 rupees. So that's telling you that the bulls believe 10,500 is a mark that they can defend on the lower level. But the bears, yesterday's up move caused them a bit of shivers. 10,600 call, that shed some contracts in open interest. And the 10,700 call, that one added some contracts for about 88 rupees. So let's see whether we go ahead and cross the 10,700 mark today as well. In terms of stocks in news, Jet Airways, the big mover yesterday, was in F&O band, as was Adani Power. Joining that list is Adani Enterprises, and a lot of long positions added on Ujjivan, Apollo Hospitals and Godfrey Phillips. Some shorts added on Idea, Yes Bank and Motherson Sumi.
Much for that, and all the best for the weekend as well. But let's shift focus to the commodity space. Manisha Gupta joins us to tell us what's going on there. Hey Manisha, good morning.
Hey, thank you so much for that. Well, starting with the crude oil prices as always, and we have seen some steady moves come in for that one. The U.S. crude inventories for the weekly basis came in as expected. You have seen yet another surge in the crude inventories, but there has been a considerable decline when you look at the product inventories, and that perhaps seems to be balancing that. And apart from that, the other fundamentals continue on. The supplies are on the higher side. The U.S. is looking to continue to pressurize the OPEC and the allies to continue to produce more. And it is a 6-month waiver on Iran sanctions. And by then, by the month of May, there will be enough U.S. supplies itself coming into the global market. So this really has been played quite well by the U.S. In pressurizing the prices. So the only thing that really remains to be seen is what the OPEC and allies will do, as in the strategy for 2019. That is what could really give some support to the crude oil prices. In the other markets, it has been a phenomenal jump that you have seen for the zinc prices. The Shanghai and the LME inventories are the lowest in a decade, and zinc prices overnight gained by more than 3%. In the international markets, we still are holding on a firmer note. But then we always understand that these inventories tend to move very fast. But at this point in time, in the last 24 hours, it really is zinc which has been the best performer in commodity space.
Okay, Manisha, thank you so much for that. But let's get back to the space of equities. We've already talked about how Jet Airways as well as Yes Bank will be in focus today, but there'll be a lot more stocks that are in news. And Sonal joins us with the list. Sonal, good morning. Over to you.
Good morning, Anisha. Well, apart from the focus because of crude oil prices, OMCs will also be in focus because the monthly petroleum consumption data is out. And this time around, in the month of October, the growth has been around 4%. And this growth we are seeing after 2 continuous months of weakness. In fact, the consumption in this particular month is the 3rd highest since January of 2018. So looking good for the oil marketing companies. This, of course, is because of the lower prices as well. Other stock that will be in focus is Capri Global because they announced their results and the profits were up around 20% on a YOY basis at 24 crore rupees. United Breweries will be in focus yet again because it did report strong set of numbers yesterday. And on the con call, the management sounded positive. They said that they have gained market share in a lot of states, including Tamil Nadu, Telangana, Telangana, Orissa, Jharkhand, Goa and rest of Maharashtra. Also, the raw material prices were lower this time around. However, they are seeing some uptick, but still that should not be impacting their margins. They think that the favorable state mix also aided the strong margin growth that they saw in Q2 of FY19. Because of the strong commentary, Kotak Institutional Equities has raised the EPS estimates by around 8 to 16% for the company. They maintain their reduced call. However, they've raised the target price to 1260 from 1040 rupees per share, and they are quite positive on the commentary of the company. Apart from that, Zee Entertainment will be in focus because HSBC, that has upgraded the stock to a hold from a reduce. They have a target price of 460 rupees per share. They think that the promoter's divestment proposal reflects some sort of acceptance of the changing industry dynamics. They think it is a positive move, and they do not have any concern that they had on the company's technological capabilities. So overall, they are positive on the company. Back to you.
Super. Thanks so much for that, Sonal. Well, on that note, let's get you some trading picks for today. Himanshu Gupta and Vishal Malkan, they are battling out for the strongest portfolio. Let's hear out what they've picked for us.
The first pick for the day is a buy on Capital First. One can go long in the counter for a target price of 525 and a stop loss below 484. The second pick for the day is a buy on ACC. One can go long in the counter for a target price of 1570 and keep a stop loss below 1485. The third pick for the day is a buy on Jet Airways. One can buy the counter for a target price of 375, maintain a stop loss below 310. The last pick for the day is a sell on Sun TV for a target price of 570 and a stop loss above 610.
PFC, buy with a stop of 104 for targets of 115. My second pick is Syndicate Bank, hence I recommend a buy with a stop of 33.5 for targets of 38. REC, buy with a stop of 122 for targets of 130. And DLF, buy with a stop of 167 for targets of 180.
And Sumit Chauhan's first pick for the day is the buy call on Tata Motors DVR with a target of 107 and stop loss of 95.3. Second pick is a buy call on Jubilant Foods with a target of 1250 and stop loss 1148. And third is also a buy, and that one is on Pidilite, target 1175, stop loss 1078. And the final pick for the day is a buy on Apollo Hospital with a target of 1375, stop loss 1248. But that was a lot of trading ideas. But what is keeping Mindspace busy, at least for Nigel, is the fact that there have been a couple of these interesting launches over the last couple of days. So, Nigel, mouth-watering launches, which one are you picking?
Well, mouth-watering, I'm telling you, if I wasn't in this profession, and in fact I wasn't in the current state of family life that I am in with the new kid coming into our family, I would definitely be buying one of that. But for the time being, I'm just very, very happy to see two new launches coming into the markets. We had Royal Enfield launching the Interceptor as well as the Continental GT, and we had the Java coming in with the 300cc. Royal Enfield, remember, they came out with the 650cc. Now, Deutsche Bank, they've come out with the note. They're spotting a couple of important factors. One, they're saying that for Royal Enfield, they believe that it'll add some volumes, not very, very large volumes, but importantly, they're saying that whoever's looking to upgrade their bike, you get stuck at 500cc. If you're looking for an upgrade, then the best possible option is what Royal Enfield has put forward to you, because they're giving you a 650cc. With regard to Java, they're saying that Java is getting into the Royal Enfield's core market, the 300, 350 to around 500cc. So 300cc is the launch. They're saying that, in fact, the Java will expand the market. It won't be eating into Royal Enfield's share. Besides that, they've given us a few dealership numbers. Obviously, Royal Enfield's reach is far more. They have nearly around 800 dealerships all across the country. The Java will be coming out with around 105, and in the next 20 days, you'll have close to around 60% of that already functioning. In terms of expectations and the sales run rate, they expecting the Java to sell 50 to around 60,000 motorcycles. And initially, there could be a good amount of demand because it's around 290, 300cc odd. With regard to Royal Enfield, they are estimating around 870,000 units. That's all the units together for FY19 itself. Finally, with regard to a stock market point of view, they are maintaining their buy rating. They have, a target price of around 28,000. They're giving it a multiple of around 21 times approximately, which is lower than the historical, level that it's been trading at. But besides stock market point of view, what a treat for all the bike lovers all across the country. You have a 650cc in India itself and a 300cc Java. Wow.
But what's the price range? How much would it cost you to get those beauties in your place?
I love the price range. Royal Enfield at around 250, 250,000 to around 3 lakhs. They have got the pricing spot on. And if you want to go in there and buy a Java as well, you're getting it at around 1.6. That's pretty attractive, pretty good. But a 650cc coming at around 2.7 lakhs. wow, you know, amazing. From a biker's point of view, it's a dream come true.
Okay, so from biker's point of view, it's a dream come true. Let's see whether the markets also gives into some of the dreams of the bulls and the bears. But that's all the time we had on the Power Breakfast. Bazaar Morning Call comes up next.